Today on Forbes, an AI boom is catapulting markets and raising fears a bubble is near. Markets are soaring, valuations are swelling, and enthusiasm for all things artificial intelligence is pumping hundreds of billions of dollars into the most transformational technology of the modern era. John Markman, a Forbes contributor who analyzes tech stocks, writes, quote, "AI isn't just another theme, it's the culmination of decades of evolution in computing. Every layer of the stack, from power generation to semiconductors to enterprise software, is being rebuilt for an AI-first world. That's a structural transformation." So, the question on everyone's mind is this growth sustainable, or is it another bubble about to burst, potentially wiping out $40 trillion of value from the NASDAQ and washing away upstart AI companies faster than they sprouted? Forbes expert contributors have been on AI bubble watch for months, tracking reliable signs of stability while warning about soft spots that echo the dot-com crash a generation ago. Forbes senior markets contributor Peter Cohan says, quote, "I see three scenarios. Gen AI keeps booming, there's a soft landing in which valuations decline somewhat, and the OpenAI bankruptcy scenario, which brings it all down abruptly should the company be unable to raise more capital to fund its money-losing operations." Indeed, OpenAI, the most recognizable brand name in artificial intelligence, has become a symbol and driver of the boom. Every megadeal OpenAI strikes, with AMD, Broadcom, NVIDIA, Oracle, and even Walmart, each new deal adds another billion-dollar brick to the AI foundation or inflates the potential bubble even more. Anxiety is growing, while investor consensus ranges from cautiously optimistic to defiantly bullish. Forbes contributor and big tech veteran Sol Rashidi points to, quote, "OpenAI's ambitions to vertically integrate compute, data, and model training at unprecedented scale." Rashidi goes on to write that the company's chief executive, Sam Altman, and his team have, quote, "quietly built a playbook based on ecosystem control, upstream equity leverage, and industrial-scape deployment, setting the tone for the next phase of AI's evolution." Forbes contributor John Markman agrees, saying, quote, "Unlike speculative manias of the past, today's AI wave is not made of vaporware or eyeball metrics. It is grounded in tangible demand, real products, and astronomical computing requirements." Those computing demands are costly, requiring hundreds of billions of dollars in new infrastructure investment. Forbes contributor Krister Holloman observes that the deals help sponsor innovation, which is the growth engine of the U.S. economy. Perhaps the most vital deal in the AI economy is OpenAI's partnership with chipmaker NVIDIA, the most valuable publicly traded company and a key tech bellwether. Some, though, are warning that our current era has echoes of the dot-com era. Forbes AI contributor Courtney Harding wonders, quote, "What happens when the AI bubble starts to leak? There are some early potential warning signs that things have gotten a little too frothy and may be pushing us in 2000's dot-com bubble territory." Back in 2000, the top tech stocks, Cisco, Dell, Intel, Lucent, and Microsoft, accounted for 15% of the S&P 500. Paulo Carvalho, a Forbes contributor and a senior fellow at Harvard, says, quote, "Such concentration heightens risk." Today, it's even more worrisome, Carvalho warns. The so-called Magnificent Seven stocks, which include some of the most heavily favored AI leaders, account for more than a third of the S&P index. Carvalho says, quote, "The concern is less about AI's long-term promise and more about inflated expectations setting the stage for a sharp correction." He adds, quote, "Binary thinking that swings between hype and the fear of an AI bubble may limit more nuanced analysis." And in order to get a true sense of what's going on, probably more nuanced analysis is what is required. For full coverage and to read more from Forbes' experts, check out Jeffrey Marcus's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.